What's going on, guys? In this video, I want to talk about how I personally come up with profitable trading strategies for trading the NASDAQ futures, as well as stocks and options. So before I get started, guys, if you're interested or have been on the fence to join Evolution Traders community and mentorship to access the courses, the live trading, the watch list, the intraday technicals, and the community, right now it is half price off for the next three traders who join. That link is down in the description box below. Now, here's a very, very simple way that you can come up with your own profitable trading strategy. Because remember, every trader, each and every single trader has a different account balance. You have a different level of experience, a different level of screen time, a different kind of timeline, horizon that you're looking at. You have different expectations, you have different needs. No two traders are similar. You can have two traders that have $25,000 accounts, but one trader also makes $250,000 a year on their 9-to-5 salary job, and the other one has just recently lost their job and is on their last $25,000 worth of savings. Those two mindsets of those two specific different traders, even though they have an equal type of account balance, is going to be completely different. Okay, so the way that one trader specifically thinks about loss, the other trader is going to think differently about loss. So the best way, the most easy way to come up with a profitable trading strategy for you is to honestly have a face-to-face with yourself in the mirror. Ask yourself, how much do I have invested? What is my account size? Whether you're trading on a prop firm or a personal account, how much money do I have to lose? That's my overall risk that I'm going to be putting forth on the table, and this is what I'm prepared to lose. Now, for example, if you're going to go on the prop firm side of things, do not look at, let's say, for example, you have a $50,000 account on Top Step and your drawdown limit is $2,000. Don't look at that $2,000 as your overall kind of risk management. Yes, of course, if you lose the $2,000, you're going to lose your account, but the account is only going to cost you 49 bucks. So look at your risk management in a sense of how much money do I want to invest to get this account funded and take a payout? What's my return on investment? For me personally, what I like to do on these $50,000 accounts is I like to put up 200 bucks. Okay, $200 is going to get me 4 accounts. Even if I do blow up 3 accounts, I should be able to get 1 funded. I'm going to trade them all the same in the beginning, and then I'm going to kind of tinker with my risk per trade depending on if I'm in a cold streak or I'm in a hot streak. So the best way that you can kind of identify the best trading strategy for you is to look at yourself in the mirror, tell yourself, how much can I afford to lose, and what do I want to see as a return on investment on my money? For example, if you put $200 into a savings account, how much is the bank going to give you at the end of the month? Probably nothing, right? Maybe a half of a penny, 2 pennies. Even, you're not going to make anything, right? We can't just go into the bank and say, hey, Mr. Bank, I'm going to go ahead and give you $200. Can you please go ahead and give me $200 back at the end of the month? They're going to laugh in your face. So why is it when you get to the trading side of things, you think that you're going to go ahead and put $50 into one account and take out 20,000? Does it realistically make sense? What's your return on investment? Now, you can make a lot of money very, very quickly in trading. However, if you look at it with a more realistic approach, you're going to be able to build a more realistic strategy on how to obtain these particular goals. What I would say is to focus on anywhere between 2 to 3% per month. If you manage to make that, whether you make it in one day, you make it on one trade, you make it in 1 week, you make it in 2 weeks, or it takes you all month to make 2 to 3%. For example, 2 to 3% on a $50,000 account is going to be somewhere between the realm of $1,000 to $1,500. If you can manage to scrape money out of the markets and extract $1,000, $1,500, I would stop trading that account. Go buy another account and work on something else, right, for the time being. Let time kind of pass by. Again, you don't have to aim for a 2 to 3% profit target, but also if you're trying to build up a trading strategy in the beginning, the worst thing that you can do for yourself is try to overextend yourself and run yourself too thin. So what that means is a lot of times traders will get into trades, and let's say, for example, they go down 200, they go down $250, $300, and the immediate reaction, and we're all human, the immediate reaction that you want to do is get into another trade to get it back, right? To get it back. But guys, look at the overall situation. It's one trade, it's two trades, it's one trading day. There's 22 some odd trading days in a month. Do you think that every single day is going to present the same kind of price action? Do you think that every single day is going to have the choppiness action and the fake outs and you know, like some of you guys get so caught up in such a small time frame of things where you kind of lose the sight of the bigger picture. So for example, look at the NASDAQ 100 today. It started off with a big drop, confirmed, immediately got bought back up, looked like it wanted to break out, dropped back down, looked like it wanted to break out again, in fact did, and then immediately got stuffed. Guys, all of this choppiness action happened within the first hour of the market. I personally know traders who will chop themselves to death. It's called death by 1,000 paper cuts. In this price range, they'll go through, they'll lose a funded account, they'll blow a personal account. In this time period when they were doing fantastic on the week, I've seen people up $1,000 on the week, give it all back and some in 1 hour's time. Now that, my friends, is emotions. That, my friends, is what you want to avoid. How do you avoid it? You have to really bite down. You have to really clinch and bite down and start to figure out, hey, this is not ideal price action. I'm noticing that there's, you know, a fake out here. There's a fake breakdown here. I just took a trade. I just lost on it. The price is right back to my entry. In fact, now it's going in my favor. You need to quickly identify that this is not the best type of trading environment and sit back. Pull yourself off the screens, take a walk, do something. I mean, but you have to. If you cannot do it, join Evolution Traders. I will tell you till I'm blue in the face, get off the computer screens, take a walk, come back when the market is better. Because look at, in fact, what happens on this last 20 SMA play to the long side at 755. Not only did it confirm, okay, not only did it confirm when Powell started talking the first time, yeah, it came down here and kind of, you know, faked everyone out like it was going to go lower. Never took out the previous swing low, never even took out the previous swing low before that. All it did was quickly wick down here and take everyone's liquidity and then ramp to the upside. And it's been a long position all day long, ever since 8 in the morning. Currently, the market's going to close right now in just about an hour's time. But from 9, 10, 11, 12, 4 hours in a row, you would have been able to catch a beautiful long move. But most traders chopped themselves up here, got depressed, got emotional, got upset, became stressed out, missed this move because A, they blew themselves up, B, they turned off the computer screens and they left with a huge loss, and they're going to come back in with that same energy on Monday and continue to repeat the pattern. And they missed, in fact, a beautiful move. So what it takes to build a profitable trading strategy depends on how much money do you have to risk, how fast, and what is your realistic expectations. Then from there, it's going to come down to how much can you afford to lose on a day in and day out basis that's not going to even tick the scale. And that means that if you take a loss or you take 2 losses and you have to shut down your computer screen and not trade on the day, how much money is that to where it's not going to affect you? Is it $50? Is it $100? Is it $200? Because once you find that emotional kind of threshold, that emotional tolerance level to the amount of loss, then from there you can build your trading strategy and say, okay, if I take 2 trades and I lose both of them and I'm risking $100 per trade, that's a $200 loss. I'm okay with walking away and coming back the next day, because you know it's only going to take you 2 trades to get right back to where you started. And on the third potential day, you're back in the green. But if you're losing $500 on one trade, you're losing $100 on another trade, and you lose $900 on a third trade, your risk management is all screwed up. There's no way to build a real profitable trading strategy if you don't understand your risk management from the jump. Again, even though we look at charts, even though we identify patterns, even though we follow price action, supply and demand, I don't care who you are. If you can't control your risk and your emotions first, you will fail at this business tremendously. If you guys want help, one-on-one coaching and mentorship and access to my lessons, make sure you guys join Evolution Traders. Right now, the price is cut in half for the next 3 traders who decide to sign up. Everyone else, please do me a favor, like, comment, and subscribe. And if you guys are looking for a fantastic prop firm to get funded with, right now, Top Step is offering only $49 for a $50,000 account. And I think that they're probably one of the better firms out there just based on all of the resources that they provide and the rules that they have. So again, that link is also down in the description box below, and I'll see all of you guys on the next one.